So what are support and resistance in the stock market? In this video, I'm going to go over how to draw and use support and resistance to either make or save a lot of money. Hey, how's it going? On this channel, you will learn the steps I took to go from trading with a full-time job to trading as a full-time job. So if you're new here, consider subscribing. And today, we're going over support and resistance. So the basic idea behind support and resistance is that you can predict what the market will do based on previous highs and lows of the market. And with those, you can base trades or your general trading strategy off of those levels. Right now, we are looking at the stock market between the year 1990 and the year 2014 on a monthly chart. So every candlestick on here is a month's worth of data. And I always think it is very important to run larger term timeframes, support and resistance, with the idea that it shows you where the market is going to go in the future and kind of where we are in the market as a whole. It allows you to be able to spot a bear market or a huge reversal in the market, or know that we are going to start a huge bullish trend in the market. Looking at the 2000 tech bubble, the 08 housing market crash, and afterwards the bull market rally that we had, drawing a few simple lines could have either made you or saved you a lot of money. As you saw after the 02 bubble, once you saw the market trending down and then start trending up, you could have drawn what we would call a resistance level at these highs up here, because the idea is the market topped out here, it couldn't go any higher, and it began to sell off and go way down. And the idea is once it comes up and hits that level again, it is going to have trouble getting through. You don't know if it's going to get through or sell off again, but the idea is that it gives you an idea and a heads up and a warning to either close all your positions that you have long or get ready to bet that the market is going to go down. So you can see that once the market did get up to that same level, it didn't break through it and it began to sell off into the huge 08 crash afterwards. A big thing about these levels is they don't have to be perfect. As you can see, I didn't draw the line up here at this level, which you could have. And the idea is that it's making a zone. The market doesn't have to hold the resistance level line exactly. The idea is that the market had trouble in this area, it sold off, and then it rallied back up to that area, and then it had trouble again there. Once it gets to that level, you need to be heads up and realize that the market is going to have trouble again potentially, and that you might need to change your trading based on that. After it hit that level, it sold off into the 08 crash. And using this previous low down here, we could have looked for where the market was going to bottom. So drawing a line down here to use as a support level, we can see that the market did bottom in this zone just like the previous bottom was. So again, it did go through it, but the idea is that zone held and the market rallied from there. One reason why I like to think that maybe these zones don't hold perfectly is because when markets are at their peak or markets are at their bottom, people are feeling high levels of emotion. They aren't thinking. Right when a market bottoms out, that is when people are feeling the most fear, and they will just be selling without thinking. And so that might push the market through that last little bit, which forces it through that zone that might hold. But the idea is that buyers do come in there and it holds that zone as support, and then it begins to rally. As it held that support level, the market began to rally it up here all the way back to our resistance level, where we would have known that the market might have trouble getting through. This time you can see that the market broke through this level. A big thing is when a support level or resistance level gets broken, that can be a big shift in the overall trend. Once it broke through this resistance level, the market started a huge rally over the next few years. Another thing I want to point out is once it broke through this level, is it came back down and tapped the resistance line. And quite often when something breaks through a major resistance or support level, it'll become the opposite. So as here, the market broke through that resistance level and then came down and tapped that level again. And instead of resistance, it was now support. Once it tapped that level, buyers came in again and it began to rally and took off. Zooming out to look at the market over the last 20 years, with those support and resistance levels, we can see that we made a channel in the market. And the idea is that this was a sideways channel, and that's a trend in the market. So for about 10 or 15 years, the market was in a sideways trend. Once it broke out of that trend, as we can see right here, by when it broke through that resistance level, the trend changes. Because it broke through the top of the channel, that means it's probably going to start a new trend to the upside. And as we can see here, it has started a huge upward trend over the last years. You could have seen that coming with just this simple support and resistance level. So to go into more analysis as we broke out of this channel, you can see that the market had struggled in this zone for about 2 years. So you could say that on a shorter time frame chart, it went into another sideways channel that we can see right here. And let's zoom in and we can use support and resistance levels to look at this area in better detail. So because it's on a monthly chart, I'm going to zoom into a weekly chart so we can see these swings a little bit better. So this is that same area that the market struggled in for a few years, but just on a smaller time frame, with each candle being a week instead of a month. So as we saw the market trying to top out here and sell off, we could have looked to the left side and used previous lows to draw price support levels and try and see a bottom. And as the market sold off into this area, you can see that it didn't get really super close to that level, but it came to a similar zone and found a bottom. As it began to rally back up into the old high levels, we could have looked and seen that, well, the market was struggling in this area before and it actually sold off from this. So let's use this zone as a support level. And as we can see, once the market came up to this support level, it struggled. It didn't even make it to that level like it did before, but it struggled there again and began to sell off back down to this previous support level that we've had drawn. And we can see that it actually broke through this level a bit by those wicks poking through. But again, it held that zone and began to rally back up to our resistance level that we had drawn previously. It struggled against this resistance level again, but it actually eventually broke through here. And that shows us that the resistance level there has been broken, and maybe we've broken out of this sideways trend for the last few years and we might start a new uptrend. Just like the last trend change out of that channel, the stock broke through that resistance level and then came back down and used that area as support. It broke through a decent amount this time, but again, the idea is that it came back down and it held that zone, and then the market began to take off and start that new uptrend again, which you could have seen coming based on these just simple support and resistance levels. Now, these support and resistance levels both times really work together just kind of like a channel. But again, channels are just support and resistance levels that are getting bounced off of multiple times, and it's not breaking either of those levels. Trend lines are another valuable support or resistance level. They're just diagonal support or resistance levels, but they work the same way as the price either has struggle in that area, or once it breaks out of that area, it becomes a very important level to understand and know that the market is changing the trend that it had previously. To show you what I mean by those trend lines, let's go into the most recent price action of the stock market. And zooming in a little bit to this area, we could have used a trend line in this market previously along this area. We could have seen that this trend line was holding the market up based on this support trend line, and then using this trend line here, this trend line was holding the market down. And this is more of an upwards trend channel as it bounced off the bottom, and then it would bounce off the top, and it traded back and forth in this channel for the better part of last year. And as we see, once it broke out of this channel, it came and touched the top of the channel and then made a new trend. And with the idea that this is already an upwards trend channel, that if it breaks out of this trend to the upside, it's going to start an even stronger uptrend. Over the end of 2017 and the beginning of 2018, the market skyrocketed because it broke out of this upwards channel and created a new extremely upwards channel, or just trend, that eventually broke down when the market corrected itself in the beginning of 2018. And what we can do with this channel and with these levels is we can actually extend these levels, because quite often these levels will still be used later on, and it looks like this might have got touched multiple times. And using this bottom support level of this previous trend that it broke out of, we could have bought the bottom of the market correction in 2018 or around that zone, and actually touched this level 3 times. And right now the market is still holding this channel down here, but it is still broken through the upward side of the channel. If we extend this to the right as well, you can see that the market struggled to get through this area again, actually, and then it topped out on top of it, and now we're above that channel again, kind of creating a new trend and a new channel. Hey, thanks for checking out this video. If you want to learn more about trends and spotting trends, check out this video right here. And if you just want to learn more about trading the stock market and reading stock charts, make sure to subscribe to the channel. And as always, leave any questions or comments below, and make sure to leave the video a thumbs up.